Hey everybody, welcome to another episode of Stock Talk. My name is Amin Reina and I'm an investment coach and founder of Sage Investors. And as an investment coach, what I do is I help new and existing investors who want to become more financially independent but feel totally intimidated and confused by the whole investing concept, the whole investing process. They either don't know where to start with the investing in terms of how to invest, or they've been investing for a while and they're just not making any traction or just not generating the returns they hope to generate. So what I do as an investment coach is I teach people and I engage with people on how to make more educated investment decisions. So ultimately that they can achieve a certain level of financial freedom in their lives and achieve it with confidence. So this is Stock Talk. This is my little podcast slash video program that I have here that I like to talk about, where I chime in on various investing concepts that I'm seeing out there in the market and talk about some of my own personal investment decisions on how I go about making them, really for the purpose of just sharing with you, and hopefully you take some nuggets of information here and nuggets of ideas and bring them into your own framework in terms of how you make investment decisions. So this is episode 80, the big 80. And today I had a whole bunch of stuff I was ready to talk to you about some research out there in terms of various terms of styles of investing and some investing concepts. I was all ready to talk about that, but I'm actually tearing up the script. I'm actually going to do that all in a future episode because some serious breaking news has occurred today, and usually I kind of don't really take them, they're important, but I think today was kind of like almost a game changer moment in terms of from an investing side, in terms of how you make some investing decisions. And really what it comes down to, the breaking news out there was the announcement this morning of Amazon paying about $13 billion to take over Whole Foods. And the first thing I know, as people, if you've been listening to my podcast and following my blogs on my website, sageinvestors.ca, you'll know that I've been an investor in Whole Foods. I have, on several occasions, bought and sold the stock, and I just recently sold it almost a few months ago. And so when I first heard the news, I was going, crap, why did I sell it? And so that was the first reaction that I had to it. But then after a second there, but that's investing, right? Like these things happen, right? Sometimes you just sell too early and you leave money on the table, and that's what it is. And that's an occupational hazard with investing. But I got over that pretty fast because I knew for the fact when I sold Whole Foods a couple months ago, I made about 24%, 25% on the stock. So, I did all right with it. So I'm not shedding too many tears on it. But really what it comes down to though, what's really to me is significant about this deal is there's so many different levels of wow by this deal, and it could have ramifications in terms of how we're doing business, in terms of certain industries, in terms of how we look at some of these companies now, and ultimately how we look at some of these stocks. So I think to me it was almost, I look at this what happened today as very much a game changer kind of moment. So I try to make some notes. I've just scratched out all my notes here. So I'm going to be just reading off my notes in terms of what I think about this deal and what are the ramifications of that. So first thing I thought about that jumped out at me is, here is an online, like Amazon's all about online sales, online retail. It is the juggernaut, the dominant, it's them and Alibaba are pretty much the juggernauts of online retail on the planet. So it's an interesting move that an online retailer like an Amazon has gone out and bought literally a bricks and mortar, a traditional company, a traditional business. So that's a big kind of game changer. And I know there's a lot of people out there that have said that Amazon at some point is going to have to get out of the virtual world and get into the hard assets kind of world because it's going to need it to survive, to really be a long-term dominant entity. And so this is really their first foray. They've kind of nibbled around the edges a little bit, but this is their first foray into kind of buying a traditional company in that sense. So that to me is a move, and that's going to trickle down. Like other online retailers are going to say, you know what, maybe we need to have hard assets. We need to have kind of boots on the ground kind of services that we have to offer. So that's one side of it, a significant move on it. Another significant move is they bought a grocery company. They bought a food company. So Amazon, they've kind of been nibbling around the edges about offering kind of a food service, being in the grocery. They've been out there talking about doing it. They've kind of piloted some stores where you literally don't even have cashiers. You just walk in, take your food, and walk out. And literally, through some element of technology, you've paid your bill and it's itemized everything and paid your bill. They're testing that stuff. But so the fact of the matter, they're buying, and they're not just buying some kind of little dorky company here. Whole Foods is a serious player in the grocery business, and what they're getting is access to an incredible distribution channel. As I said, this company, like Whole Foods, is not a dorky little company. They are a well-established, best-of-breed market leader in the grocery business. And so that's an element. They've got that instant distribution network. And it's not just, stores. They have stores that are positioned in very strategic areas, very prime, upper middle income type neighborhoods. They're not like just sitting in warehouses and all that. So they have now access to an incredible distribution network, a food distribution network. So now all of a sudden, this company, Amazon, is now a player in the grocery business and in the food distribution business. And that's a big deal. So they've pretty much, what they're telling us is that they're going all in on this, and they're going hard, and they're going to be going hard at companies like Walmart, Costco, traditional companies here, like up here in Canada, the Loblaws of the world, the Safeways of the world, Metro Richelieu of the world, Sobeys. Like they are putting them on notice now, saying, hey, we're going after some of your business. So that's a game changer moment right there. The other element of two is it's bought Whole Foods. To me, Whole Foods, and again, I've talked about this in my previous posts and analysis, is that I think Whole Foods is very much a luxury brand. It is clearly, they've targeted sort of that upper income foodie gourmet segment out there that want high quality, natural, healthy foods. And they are best of breed. They know this better than anybody. Now, granted, Wall Street and Bay Street hate the company in a sense because they're losing their margins, because other grocery stores are coming into play offering a similar kind of product line in terms of organics and more health focused, natural, fresh food kind of thing. And that's whittled away at Whole Foods market share. But make no mistake about it. To me, Whole Foods is a luxury brand. And so Amazon, one of their kind of voids when you look at the company in terms of what their offering is and their product offering is they don't have a lot in terms of luxury exclusive type products. Mainly because a lot of those luxury brands don't want to sell on Amazon because they want to keep their exclusivity factor. They want to, Louis Vuitton is not going to sell on Amazon because they want to, because then it would just dilute the brand. And if it's just everywhere mass marketing, as tempting as it is, it would just dilute the brand. So a lot of companies, especially on the luxury side of it, don't want to go there and don't want to kind of associate themselves with Amazon. So what Amazon has done is that by buying Whole Foods, they've kind of it's their first foray into that luxury segment. And so that's a big deal. And it's going to be really interesting to see how things respond, how people respond, how organizations respond to it. So these are the elements right now. For me, when I think about what's happened here, these are kind of game changer moments. These are going to have kind of really earth-shattering kind of impacts in terms of that whole retail side of the business. So the questions that I think we have to ask ourselves is, what are they going to do with it? What are they going to do with Whole Foods? Are they going to keep it as a separate entity and still continue to build up the scale of it being kind of that exclusive targeting upper level income kind of brands, offering more higher product, high quality kind of foods? Are they just going to kind of let it kind of do its own thing? Or are they going to just kind of bring it in? And did they buy the company for that? Or did they buy it did they just buy it, the distribution network? So now, all of a sudden now, they have access to real estate in really prime areas Are they going to just kind of water down the Whole Foods kind of brand offering, value proposition, and integrate their own product lines, their own services around those locations? Are they going to leverage those distribution channels so that they can become a bigger player in offering more mainstream kind of grocery products, and or their other products, billions and billions of products that they offer out there? That's going to be an interesting question. That's kind of like the iffy question around there. So it's really, to me, it's really like there's so many different levels of this move, and from a strategic standpoint, which is fascinating, which I'm really interested in. And as an investor, so now here we go. As an investor, what do we make about this? Is buying Whole Foods kind of going to make them now the dominant player in terms of groceries, food distribution, food sales, food retail? If that's the case, then that's good for, I think it'll be good for Amazon's top line, which is their business model. But the reality is groceries, the grocery business is a very low margin business. They make profit, but they don't make crazy profit. And for Amazon, which is a very high growth, uber growth, they're obsessed with growing the top line. They may not get any additional incremental profit from buying Whole Foods, but that's not Amazon's business model. They've operated for decades now with very minimal profitability. Their business model is just being the biggest at everything. Revenue is the biggest thing. They don't really care as much about a profit. And so this kind of deal is kind of right up their pipeline. It's interesting to know, because I've done a little bit more analysis of Whole Foods, is their margins, Whole Foods margins, are much higher than other traditional type retailers in that space. So even if their intention was not to buy it for profit, they're probably going to get a little bit of a boost in terms of a profitability side of it from that side, because Whole Foods is probably the best of breed in terms of financial performance from that perspective, from a margin perspective from that. So it's really interesting, and it's created some questions. As I said, this is a lot, in a way, disrupting the whole grocery area. And so to me, the questions that I have now is for companies like Walmart, Costco, Target, up here in Canada, Loblaws, Metro Richelieu, Sobeys, Empire Group. Is this kind of a negative game changer moment for these companies? I own, in my portfolio, I have Walmart in my portfolio. I was literally like a week ago thinking about selling it, and I was up almost 25%. And today, after the news, the market was down. It's down 5%. I think Target's down 10%. Whole Foods is down like 8%. Costco's down 8%. So it's an interesting situation right now. I think today there's a lot of hysteria, because I think it's just a knee-jerk reaction right now to things. Is like, Costco, like, gonna go out of business now because Whole Foods, Amazon's like gonna start really going hard and heavy on grocery. Hard to tell. I think it's hard to tell right now. So it's going to be interesting now. So from an investing perspective, I'm going to keep an eye on some of these retailers like the Targets and the Walmarts and the Costcos, because those prices might slip down into an area, into a zone that might start looking a little bit appealing to me from that perspective. Right now, as I said, I own Walmart stock, and so the stock is down. It was 79. It's now down to 74. I haven't checked it of late. So now I'm starting to think, you know what, maybe should I get out of Walmart right now, or should I just buy more? Because is what's going on right now just very knee-jerk, very much hysteria. A lot of emotional kind of reactions are coming in on this move. This is one of those, these are kind of these moments as investors where we're just kind of do it from the emotional side of it kind of pulls you back and forth, and it's tough. How do you make a decision, or you just stand back? Sometimes the best decisions you make are the ones where you don't do anything. So this is the kind of a dilemma that I'm in. This is the kind of decision moment that I'm facing personally in my portfolio. And as you know, I always comment, and I'm very transparent on what I do with my decisions. And so, if you want, just follow me on Twitter. My handle is @SageInvestors, because I tweet all my investment decisions in real time, so you can check it out there. Or you can, in subsequent blog posts, I'm going to probably talk a little bit about my decision, whatever I do, even my decision to stand pat on holding Walmart because of this deal. check it out. Keep following me. The best way actually you can do it is just subscribe to my newsletter, because I'll be I'll post everything up there every Wednesday and sending it out to you in email format. So you can go to my website and click on the subscribe button, and you can sign up for my weekly email in the loop newsletter. So yeah, I really thought this was a big deal, and usually I don't get too excited about mergers and these type of things, but to me there's so many levels of impacts that I think this type of deal is going to have on there. Another one I can think of at the top of my head is with this move to buy a bricks and mortar company, and also the real estate that goes behind it. It's interesting because we're seeing a lot of malls now sitting idle, are shutting down, just getting torn down. There's a lot of real estate sitting out there. Is this kind of move by Amazon going to trigger other online retailers to consider adopting some kind of bricks and mortar presence in their business model? And so it's going to be interesting to see some of these like real estate investment trusts that hold these, own these properties, these malls, shopping malls, and places like that. Are they going to see a little bit of a bump now by a potential other companies looking for real estate portfolios or looking for a footprint out there? So again, another level of intrigue that has been brought to play. So I just wanted to share with you some stuff real time, what I'm thinking about this deal. Be interested to hear what you hear. I'd like to hear your take on it. You can send me, you can go on as I said, you can go on Twitter, @SageInvestors, offer some takes on there. What else? You can contact me through my website, sageinvestors.ca. And if you have any questions about this or comments, I'd love to hear about it. Have any questions about my coaching service, where I teach people about investing? I have some online courses that I teach people some various elements in terms of buying stocks and ETFs. You can just jump on my website and get some more information and drop me a line and ask me some questions. What else have I got? I got an announcement, special announcement. Also have a special announcement here. This part I was going to talk about anyway, no matter what was going to happen. My next webinar, it's good to go. Hopefully, the last one I had to cancel because my kid got sick and just a whole bunch of stuff going on. So just a bad time. But, and that webinar was on ETFs, and I'm going to schedule that for probably in July or August. But I wanted to do this other one because I kind of had it lined up to go for June, and that is my next webinar, which is going to be on June 27th at 12 noon Eastern Daylight Time, lunchtime type thing, free webinar, and I'm going to talk about finding your investing path. I've done this one in the past, and I want to do it again because I like this one. I think there's a lot of people out there that are looking to start investing, and they just don't know where to start. They go out and they buy stocks, they open up the bank account, they open up an RSP, they open up a TFSA, a Roth IRA, they set up a brokerage account. They got all these things going on, they got all this access to research, and they just sort of sit there and go, what the hell do I do with this? And a lot of times people are just trying to get to the end result without figuring out really what path they really need to be on in terms of making investing in a way that's going to work for them. Asking questions like, should I be investing on my own? Should I do this stuff on my own, or should I work for an advisor? Should I be buying individual stocks, or should I be buying ETFs? So I'm going to go through all kinds of things, different paths that are available to us as investors, and how to figure out what the right path is for you. And I'm going to talk a little bit about that, share some insights that I think can help you, and offer you some opportunities also where we can work together and where I can help you out really formalize your path and identify what kind of competencies and skills you're going to need, and give you an action plan on getting on your investing path and start making this stuff happen. So look for it. June 27th, 12 noon. If you want to sign up for it, you got to sign up for it. You got to go to my website, sageinvestors.ca. There's a big poster up there. Just click through and I just need your, just drop your name and email address, and I'll send you all the information, the logistics to connect to the for the webinar. And I'd really love to see you out there, and more than happy to answer questions about this investing stuff. And because ultimately I want to get what I do is helping people find their investing path. And so this is a talk that I do that really kind of crystallizes a lot of things, and people when I've delivered it feel like they have a little bit of clarity in terms of what kind of path that they should be on. So I look forward to I'll be talking more about it in upcoming podcasts and upcoming posts. So that's all I got for you this week. A little bit of a audible. But that's fine. We'll go back to our original topic that I was going to talk about. We'll do that probably in the next episode. So thank you very much for listening to another episode of Stock Talk. My name is Amin Reina, and again, I'm an investment coach and founder of Sage Investors. Thank you so much for listening. All our episodes are on iTunes, so feel free to go on there, search for Sage Investors, and subscribe, and leave any comments, feedback that you have about the program. I'd be happy to hear it. Be much appreciated. And so that's it. So hopefully we'll catch you. Well, thank you for joining me, and we'll catch you again another time. Take care. Bye-bye.